This ridiculously simple trading strategy is what gives me days like this, and this. And I'm going to show you exactly how it works. This is so simple that even complete beginners cannot get this wrong. In fact, it's so simple that you're going to think it's almost too boring to execute. The best part about this is that it works every single day, Monday to Friday at the exact same time. I'm also going to do some live backtesting with you to show you and prove to you that you can start using this strategy right now, starting today, profitably. And by the end of this video, you'll know how to make consistent profit from the market using a proven, tested strategy that only takes you around 60 to 90 minutes a day. You're going to learn how this strategy is the only thing you actually need in your arsenal to be consistent as a day trader. I'll show you how to find your entries. I'll show you what levels to look for, how to set your take profit, and where to put your stop loss so that there's no confusion and there's no umming and ahhing. You know exactly what to do mechanically every single day to make profit. So let's go ahead and jump into the charts and break down the strategy. Right, so the first step to this is you have to make sure that you are at your desk at 9:30 a.m. Eastern time, New York time. All right, we're going to be working with the New York session after we've already had our Asia levels and our London levels printed on the charts. Then there's a couple of simple steps that we're going to be following in order to find consistent trades. So the very first thing we're going to do is right now you can see that we are right here, 9:30. I'm using the 5-minute chart. All right, it's very important that we use the 5-minute chart. We're here at 9:30, and you're just going to look for this first 9:30 5-minute candle. All right, it's really important that the first 5-minute candle has been printed, and we're just going to draw our 5-minute range for this candle. So the way that I do this is I like to use the square tool like this, and you can just kind of draw out a little box. All right, make it like a nice light color so it's not too intrusive on your screen. I like to keep things simple, man. So once you've done that, you've now got a range of the 5-minute, right? You got a high and low of the candle. That's kind of what we're looking for here. And look, it doesn't matter whether you're trading ES, NASDAQ, gold, whatever it is, whatever market you are trading, it works the same for pretty much any kind of asset you might be trading. I specifically trade NASDAQ and ES, so that's what I'm using here, but you can apply this to whatever asset you're trading. So once we've got the 5-minute candle range kind of drawn out here, we're just going to swap over to the 1-minute chart, and we're going to have a little look to see what's happening. What I'm specifically looking for when we get to this range is a break of the range, right? Now, what it means is that I need to see candles close outside of the range. When they do close outside of the range, I'm looking for a very specific way for them to close. It's not just about a candle closing, it's about the way in which the candle closes, which is really critical here. We have to make sure that it's not just a wick that's coming out of the chart. It can't just be a wick. It needs to be a full displacement candle. It's a specific type of candle that gets formed that shows us how the market is going to move. It's super, super important because what we're waiting for here is a high volume push, an energetic push in the market, which tells us instantly which way the market might be wanting to go in those first 5 minutes, which brings us to essentially the most critical step of this, which is looking for that displacement entry when we're going to actually enter the trade, right? It confirms the entry for us once we see displacement happening outside of the range. Not only does it help us with the entry, but it kind of tells us where we're going to be setting our stop loss as well. So let's just play some of these candles out on the 1 minute and see what happens here. Now, here we go. It's very important when we're looking at this, right? Right here, you're going to see that this candle specifically did close outside of the range, but this is not what I would call a clean displacement. What I'm actually looking for is a fair value gap to form outside of the range. That's the most critical component here. Now, if you don't know what a fair value gap is, it's pretty straightforward. A fair value gap is when the low of candle one, right, in a 3-candle pattern. So we're going to look at these 3 candles. I will actually just close this candle off here just so we can see very clearly, right? We're looking at these 3 candles, a 3-candle pattern where the low of candle 1 does not overlap the high of candle 3. All right, so there has to be a gap in the middle here. I will just draw it out for you just to make it super clear right here. All right. This red block here is what we have. Essentially, that's the fair value gap, all right? So we have to have this fair value gap formed before we enter a trade. As soon as that candle is formed, we can then wait to see what this candle does. Because remember, the only way this candle can be a fair value gap is if this candle has printed, right? Because if this candle hasn't printed yet, we don't know what's going to happen, right? this candle might come all the way back up here and wick all the way up to here. And if it does that, then it's not a fair value gap anymore, right? The same way, if you look at like this candle, right? This candle could have been a really big fair value gap, but because the price wicks up, you've got a really tiny gap here, which is valid. But what I'm trying to say is we're looking for a large displacement candle like this. We've got a nice big gap, which gives us an indication that there could be some sort of move here, all right? So once you've got the move, you're then going to look for your entry setup, right? So obviously we're coming down here. Because we're coming down in the range, that means we are bearish, right? We're looking for a short position here. So I'm going to go ahead and grab my short position tool here, and my entry is pretty much going to be on the candle close here, which is just right there. Right now, you can kind of, if you can get an entry kind of like closer up to the fair value gap, that's great. But unfortunately, this candle has kind of printed quite far down, and that's just the nature of the candle, right? So we would be looking for an entry pretty much here, right? So if the candle prints this way, we don't really have a choice, right? But that's the rule. Now, if we stop loss, typically, right, what I'm actually looking for is just a stop at the bottom of the candle here. Now, I have a couple of different rules around this. There's a few people that use opening range moves like this, and they'll have their own rules about how we place our stops. My specific rules on this is that I do not like to use extremely tight stops, okay? I like to keep my stops a little bit wider, all right? I'm gonna actually place my stop just here, right? Now, I know when you're looking at this, you're probably thinking it's a massive stop. It is a pretty big stop. It is a pretty big stop, this one. We've got like an 87-point stop here. Now, a lot of people would look at that and say, wow, that's just too big of a stop. But it's not really about how big the stop loss position is. It's about how much you're actually willing to risk per trade, right? So if you're going to be placing like multiple contracts on this trade, then yes, it's going to be expensive. But every time you put a trade down, you should have a dollar risk amount that you're willing to risk per trade. All right. You shouldn't be risking random amounts. So I know that at this level, I will be comfortable trading a contract on this position, right? So it's very, very important that you don't just get frightened by the size of a stop. All right. So that's what I'm trying to say. Now, in this particular example, there's a couple of different reasons why I'm placing my stop a little bit higher here. Number one, you can see that here, right? Right there, if you look at where that line is, you got a lot of rejection of this line. Now, what that tells me is that if price decides to come back up here, it might want to take some of these levels out because it's a point of liquidity. All right. So what I don't want is for me to get wicked out in price and then the price to reject, because that would be really annoying, right? So I just want to make sure that my stop is big enough to handle that. Once I've done that, I've placed my entry. All I'm looking for is a 2R trade, right? So we've got risk to reward of 2 here, and that's it. You're never gonna, don't overthink this, all right? You're just looking for a 2R trade, all right? And the reason that I say that is because I'm trying to make this mechanical for you. I don't want you to sit here thinking, oh, should I trail my stop now? Should I do this? Should I do that? No, that's how people lose. You are going to have a mechanical approach to this. You're going to have a very simple approach of a specific R that you're looking for every single time you're looking for a trade. So you're just looking for a 2R trade here. All right. So let's just go ahead and take a look at how this one plays out. Also, for anybody that's looking to simplify their trading and find consistency in the market, check out my trading course, The 90-Minute Trader, where you get access to my entire trading strategy, as well as my trading community, and even my daily market analysis, where you'll get a bias of whether I'm bullish or bearish and what I'm going to be planning to do for the day. You'll also get a ton of other resources that I've put into this program that are going to help you to become more profitable and consistent. I'll go ahead and leave a link in the description below for you to go and check that out. Now, look, let me ask you, if you've got a proven strategy, are you the kind of person that's actually going to be consistent with it? Because what I'm showing you right here is a really, really simple way to trade the market. And most of the time, the reason people are not successful with this is because they start messing around with the system. They don't follow the rules. They don't follow the mechanics of what they're supposed to be doing every time. And that is actually what makes people lose. I can't explain to you the importance of having a system that you follow every single day. All right. It's the most important skill that any profitable trader has, is the ability to stick to mechanical rules. It's what's allowed me to become profitable, and everybody else that I traded that is profitable has followed that principle. So I hope you're not brushing this technique off and this methodology off just because of how simple it is. We've pretty much got the setup we need here. We've had displacement. And remember, when we have displacement, what it's telling us is that we have larger players in the market that are moving the price right now. The reason that we know this, right? The reason that we can kind of make this assumption, or this very good assumption, I would say, is because when you have the 5 minute range, right? This is the most high volume part of the day into the trading day, right? The New York open session is when we're going to have lots and lots of volume, lots and lots of volatility. So when we have this kind of move in the first 5 minutes of the range, and there's displacement outside of the range, it pretty much is giving us a very big indication that there are some big players moving price bearish for the market today. All right. Is this going to work 100% of the time? Of course not, because then I would be a trillionaire and so would you. But this is a great indicator of how we can see what the market is going to do. So as a reminder, we're going to put our position here. We're going to look for a 2-hour trade. What that means is that let's say you risk $100 here, right? So you're risking $100 on your trade here. That means that you're going to make $200 on the trade. All right. So it just means double the amount of your risk, right? 2R means two of your risk, right? So risk times two is 200. 1.5 would be $150. 1-to-1 ratio would be $100, right? But we always look for a 2-hour trade. The reason we look for a 2-hour trade is because when you're losing trades, you're losing less than you're making when you win, right? Because the way to do this is you want to basically make sure that even if you're winning only half of the time, let's say your win rate is 50%, as long as you're making double the amount when you win, then over time you are profitable, right? So that's why the risk to reward here is extremely important. We have to do a 1-to-2 risk, right? So let's play this out. Let's see what happens. So as we can see here, price first does come up, as I mentioned before, to come and take out liquidity in these areas. It's really, really important that we keep our stops in an appropriate way to ensure that we don't just get wicked out here. Then let's see what happens for the rest of the move here. We will see that price comes along and taps into the target area here. Now, I also want to just show you, right, like how important that first 5 minute rule is, because it's not just an indication for a couple of minutes. Typically, you will see the market do something like this, right? Where the market is pretty much telling us that we are in a bearish sentiment for the day. And you can see that if you wanted to, you could have caught a much bigger move here, but it's not about catching massive moves, all right? It's really important that you don't get yourself trapped into this idea that we have to capture the entire move. Of course, it'd be great if we went all the way down to here and caught the entire thing, but that's also how people end up losing money and they don't end up successful because they're always looking for these haymakers, but that's not what we need. To be successful with this, especially if you're trading prop firms, is just to simply look for your base hits. This is what I would call a base hit, right? A 2-hour trade, it's beautiful, you've hit it, and you're done, all right? So I've just pulled the time back to another day in the market. Can't remember what day this is. This is just a couple of days ago, right on the 5th, okay? So we are now gonna just mark our 5 minute candle. So we look for that 9:30 candle, right? This is the 5 minute chart. We're just gonna draw out our range. Let's make this nice and easy on the eyes. Let's switch over to the 1 minute time frame here. And let's take a look at what's going on. So here's the first 5 minutes. We can see that price is coming down into the bottom of the 5 minute range. Let's see what happens. Okay. Now, for anybody that's paying attention, we will know that this is not the correct type of close that we're looking for, right? We want to see a fair value gap form outside of the range, but this is not the appropriate close. This is not what we want to see. We want to see proper displacement outside of the range, so you would not enter the trade here. Let's see what happens next. All right, here we go. So now the price, oh, don't rush off without me. Don't you rush off. All right, so let's come back a second here. This is where we want to be, right? So here we go. Price now has printed a fair value gap. Okay, so remember, we're looking for a fair value gap to print outside of the range. We've got the gap there. Let's just color that in. And then we're looking for the next candle to print. Remember, this candle has to print before we enter, because if it doesn't, we then don't actually know if this is a fair value gap yet. We have to confirm that there is a fair value gap. All right, so here we go. We're going to enter the trade up here. Now, remember what I said about wicks, right? And how stop losses need to just bear in mind, like how much, price can wick around. So what you're going to do is if you want to be really kind of tight on your stop, you could put the stop at the bottom of the fair value gap candle. The only reason that I don't always like this, right, is because sometimes price can come into the fair value gap and it can just wick out and then go in the opposite direction. I don't want you to get trapped by wicks like this. So all I'm suggesting here is just come back to the previous candle just like this, just a little bit further down. All right. So this is now 73-point stop. It's a little bit wider, right? I know it's a little bit wider, but I'm just trying to make sure that you're not getting wicked out. All right. Again, it's completely up to you. It's your discretion. You can do this if you want. I would suggest this. All right. But let's see. Let's put it here on the stop just there. We've now entered the trade. Remember, we are just looking for a 2R trade. So we are looking for, what are we doing here? We are looking for 25,732 on price here. So let's go ahead and print and see how this works. All right, so price is playing around here. Let's just stretch this out a little bit. Price has come back into entry. Okay, have we hit target here? Almost. We've almost hit target there. There we go. Target hit. All right. So that one, a bit more of a choppy trade, a bit more of a choppy trade. But what I will say is if you look at our entry, we practically didn't experience any drawdown other than this little wick that came here, but a tiny bit of drawdown just there. But price did go and it hit the target again. So again, guys, really simple. You look for the 5-minute candle, you're going to draw your range. You just simply are looking for price to create a fair value gap outside of the range. Enter on the candle, on the next candle. Once the fair value gap is confirmed, look for a 2-hour trade, and that's all you're gonna do. All right, let's try it one more time. And one thing I want to say here is, look, I just want you to understand that no matter how good your strategy is, it kind of doesn't really matter in the end. You could actually have a mediocre strategy with a generally low win rate. But if you are consistent with the strategy and you trust it, you are very, very likely to actually become a profitable trader, even with a mediocre strategy. Everything comes down to your mindset and the way that you actually execute. Because here's the thing, right? If you don't trust the strategy, you will start doing things during the trade that you're not supposed to do. And I've experienced this myself. I've done this so many times over the years when I've been learning, especially in the early days, where I would enter a trade and I know exactly what the setup is. I know all the technicals. I know what I need to do. I know where the stop goes, the take profit, the risk, and everything else. I know everything. The only thing I don't know is how I trust the system. So what I end up doing is when a trade is starting to move in an opposite direction, I start messing around with my stop loss. Now, one thing I'm going to show you here with this particular trade, right? This is a great example because I know a lot of people, right, will be in this trade. And when price comes up to here and it starts coming down like this, a lot of people will freak out. A lot of people will move their stop. A lot of people would exit their trade right here because they're like, oh no, like the price is coming back, so I need to get out of the trade. So they'll start doing all this weird stuff during a trade. But I'm going to teach you something right now that I wish I knew when I started. You do not get smarter during a trade. Every successful trader will tell you this. You do not get smarter when you're in a trade. Once you set the trade, let the mechanics of the trade play out and don't do anything. Just let it play out. And the most important thing here is, as I said, you have to be consistent. Do not start messing around with stop loss. Do not exit trades early. Do not enter trades early. Just wait for all the mechanics and all the rules of the trade setup to be present. And if you do that, you're much more likely, you're extremely likely actually to become successful with this because you're following a set bunch of rules that you need to follow. Now, a lot of people also ask me, are these rules good for prop firms? And this is the way that I would trade a prop firm. I would not be trying to do too much anything complicated with a prop firm because a lot of prop firms have rules, they have regulations and kind of requirements in the way in which you're supposed to trade, like certain amounts of profit. Some prop firms are capped, all the rest of it. Some prop firms have consistency rules. And the beauty of using a system like this is that you are basically giving yourself a set risk to reward every single time. So if you're using prop firms, this is great because it pretty much means that your profit is always going to be very, very consistent, which means getting a payout is going to be really simple, right? And straightforward. You're not breaking any rules, you're not doing anything wrong. A lot of people ask me what the best prop firm is. Honestly, I use Apex personally, but I also really like Top Step. I think Apex and Topstep are two of the bigger firms out there. They've been around for a long time, so you're in good hands. Apex does have some rules that need to be followed in order to qualify for payouts. So just be sure to read through all the rules and everything else if you are going to be doing that. I'll leave a link to prop firms below that I recommend if you want to check them out. All right. So the reason that I mentioned prop firms is because we'd only actually have to hit a couple of these trades to actually pass on a prop firm. So on Apex, for example, you have to hit $3,000 as a profit goal to be able to pass. Now, I know you're probably thinking, wow, that's a lot, Joey. Like, how do I get to $3,000? Well, honestly, like one of these setups below, like will get you pretty far. Let's just say, for example, right, this is a 2 hour trade. Okay. So if you risked $500, you're basically making $1,000 on this trade, right? So this is $1,000 profit trade. The setup that I showed you before, again, if we risk $500, we're making $1,000 on that trade. Guys, that's only 2 setups, right? So now we're $2,000 there. We're two-thirds of the way there to our target. So all we gotta do is find one more trade and you're there, right? Now, these 2 trades I've shown you guys, this is November 5th, and we are on November 6th today. So the setup I showed you, the first one, that was from today. This setup was from yesterday, and I'm gonna show you another one from a couple of days ago, probably the day before, actually, and you'll see well, you're going to see in a minute what happened. But the point is that you only really need to do a couple of these trades and you would have passed your prop firm account. So the reason I say that is because this is a great way, a great consistent way for you to be able to approach evaluations, pass them, and then you can even use this strategy when you're trading your funded accounts. It's a great way for you to approach your prop firm game. All right, so let's do one more example. And again, I just want to show you the date. This is the 4th of November. Now, the reason I've chosen the last 3 days is because I think it gives you a really realistic approach of how this works in real life, right? I could just go and cherry pick loads of examples of when this has worked or whatever, but I want to do this with you live. I want to show you the last 3 real days of market activity to show you if this works or not, right? So we've had 2 trades so far over the last 2 days that have worked. This is now the 4th of November. So let's see if this one works. So if you've been paying attention, you should know by now, we're looking for the 9:30 candle at New York Open. We're gonna mark out our range like this. All right, nice and good. Let's make this nice and easy on the eyes. I've said about 1,000 times. And once we have the range, let's go to the 1 minute candle. Now, interestingly enough, when you look at the 1 minute candles, right, you've got a nice displacive candle here on the downside that looks quite bearish, right? It's even closed under these lows. Now, it's really easy for you to anticipate that this might look bearish, right? Because if you actually look at the price is coming down, like lower lows, lower lows, lower lows, lower lows, right? We are making lower lows, but I don't want you to break your rule. What is the rule? The rule is that we have to have a displacive candle outside of the 5 minute range, not inside. All right. So that has not closed outside. We cannot take a short. Let's see what happens. All right. Now, interesting. You've got a bullish candle that has just shot right back up inside the range. And if you know a little bit about fair value gaps here, you will see here, right? You got a fair value gap here. Let's call that red. And this candle, this one candle, has gone and closed right above this fair value gap. So for anybody that knows this, this is known as an inverted fair value gap. And an inverted fair value gap is a sign that price may reverse. Also, this is a completely balanced price range now because this gap that was created is completely displaced immediately with this candle, which tells us that it might have been a false move. This move down might have been a false move. That's a different lesson, but I just wanted to point that out. It's kind of good to kind of mention it as we're seeing it. Let's see what price does. Okay, cool. So now let's get rid of this little guy. We can see here we've got a nice bullish displacement candle outside of the range. That's what we look for, right? Even there's a little bit, it's closed outside the range. That's the rules. We have a fair value gap formed. That's what we look for. All right. This is quite a nice big candle, so I'm very happy now to put a position here for a long, and I don't mind putting a stop under this gap because this is quite a nice, sizable gap. All right, we don't really need to go much bigger than that, so it's nice. And we're only looking for a 2 hour trade as always, so let's just look for our 2 hour just here, right on the dot, 2 hour trade. Let's go some space here, and let's see how we play. Okay, there we go. Right there, 2-hour trade. That one hit pretty fast, guys. Pretty fast, I have to say. And let's see what actually happens afterwards. I'm just curious. Do we continue up or what? Okay, looks like we're struggling to break. All right, displacing down. All right. Okay, so now we have displaced downwards, interestingly, and price is starting to look pretty bearish, and we might actually come all the way down. Okay, never mind. So the point is that this is why, right? This is why you're only looking for 2R, right? You start looking for bigger moves. Imagine, guys, imagine that you were looking for a big move here. You would be so annoyed at yourself because you were trying to find this massive move that then just comes back down at break even and could even potentially just stop you out completely, right? Like it's pretty close to stop now. It's probably gonna hit the stop, and then you just be yeah, and then you just be really upset with yourself, right? But if you stick to the 2R rule, right, you will be safe. You will be safe. There's much more likelihood of you actually hitting your trades and your targets because your targets are not so big, right? 2R is a very, very healthy, reasonable way to take a trade. So there we go. That's 3 out of 3 over the last 3 days. This setup has worked every single time. Now I know it's boring and it's repetitive, but honestly, that's what profitable trading actually is. And that's the goal of this channel. That's what I want to do with what I'm doing with my trading education business. I want to make as many successful traders as I possibly can. And if you just simply follow a system like this and you apply it and you implement and you do it consistently, you are on your way to profitability. And look, I know it's not fancy, it's not the most advanced strategy in the world, but honestly, simple things in life are often the things that work best. And if you're trying to pass your prop firm accounts there, that's 3 out of 3 trades. So let's just say you started your prop firm challenge on November the 4th and you hit all 3 of those trades. Those trades are $500 risk per trade. You would have made $1,000 3 times, $3,000 profit in 3 days. You would have passed your evaluation accounts and been funded by the 4th day. That's how simple this can be if you just apply mechanically and don't start doing weird stuff when you're in trade. Just trust the process and go with it. Are you going to pass every single time? No. You're not going to always get 3 hits in a row, okay? That's not always going to happen. But from the testing that I've done on this mechanism and this model, it's very, very consistent. And no, it doesn't win every single day, but it has been profitable for me. And if you apply it, I want you to go and try it for yourself, and you will see that it'll be profitable for you too. And look, I just want you to know, like, I used to watch YouTube videos of people doing things and trying to teach things and whatever, right? And the biggest thing that I always struggled with was that I'd learn all this new information, but I never actually knew how to execute on the charts. I never knew how to actually go and implement a technique or a strategy on the charts. And the whole thing that I'm trying to do with this is I want to give you practical ways to go and do stuff right now. You can go and take this mechanism, take this model right now and apply it to the charts and actually make some money, right? That's the whole point of this. There's no point going and learning about every single phrase, every single model, every single thing. Like, you don't need to know it all. You don't need to know every single ICT concept. You don't need to know every single PD array. You don't need to know a breaker block, right? Like, I don't trade breaker blocks. I don't look for breaker blocks. I don't trade order blocks. I don't look for order blocks. I used to, but now I have a very specific and methodical way in which I trade, and that's it. That's the only thing that I do every day. This is one of the models that I use. It's not the only model. I also trade other models, and there is a specific model that I trade very consistently every day that I feel is more effective than this. It's a little bit more profitable than this for me. I've been trading that model for a number of years now. And if you are interested in that, if you want to learn about it, then you can go ahead and connect with me personally inside my community. To get access to that, you just got to go and grab my trading course. The link is in the description below. The 90-minute trader. Go and pick it up. You can learn my entire strategy. And then you can also connect with me in the community, and I will actually go and review your trades in the community. I can talk to you. I can, answer any questions that you might have, any challenges that you might have with your trading, and I'd be happy to, see how I can help. All right. So if you want to check that out, the link is in the description. Make sure you subscribe to this channel, because in my next video, I'm going to show you even more great ways in which you can become even more profitable. All right. So I hope you enjoyed this. I hope you got some value from this. If you did, share it, love it, subscribe, do all the things, and go and check out my course. And I will see you in the next video.